To the channel. Today's date is March 25th, 2025. And today we're going to be talking about how we believe that this is the beginning of the end of the MicroStrategy Ponzi scheme, now known as strategy. And for bonus content, we're going to go over the strangle and how you can make $750 to $1,000 a day selling daily options. Let's get straight into it. Started in about November of last year, we started talking about MicroStrategy and how we believe that it's a Ponzi scheme. And at that point, MicroStrategy was about $500. It was blowing up. They was raising all type of money, like $2 billion, $2 billion here, $2 billion there, to buy more Bitcoin. But we called it a Ponzi scheme at the time, and we believe that they was using money that they was raising to pay off their bills and also to buy more Bitcoin. But as Bitcoin kept going up, MicroStrategy stock kept going up. But as I said, we believe that this is the beginning of the end, and we have proof. But first, we're going to go over their annual report real quick. And here they talk about that their Bitcoin yield is up 74%. That's not a yield. It doesn't it doesn't pay any dividends, so they can't really have a yield. Bitcoin doesn't pay any dividends, so they really can't have a yield. And that's and we just don't believe in that. But that's something that they use to sell to investors. But what we did want to talk about was really, really important is their software business. And to my surprise, they have a strategy has a really good software business. I mean, it don't make a lot of money like Microsoft and stuff, but it's a good business. They had $120 million in revenue, and they had a profit of $86 million, which represents 71% gross margins. That is really, really good gross margins. I wish my businesses had 71% gross margins. But so that's it. But it's important to note that they make $86 million a quarter because that's actually the capital that they generate besides selling Bitcoin. And here's an article that was on MSN. I'm using MSN because it broke it down the best. But in filing the software, in filing Friday, the software company. But beginning of last week, before I go on with this, they tried to sell $500 million on a 12% yield. But in this article here, they had to sell preferred stock at $85 a share. That is 15% below the $100 price that they originally expected of filing a sale. That means investors don't want to pay the money that MicroStrategy is asking for. Where only not too long ago they was able to raise $2 billion. But they were able to raise $711 million with this, and probably because of the decrease in stock price. And at selling stock at $85 a share, and then and you notice on the chart the stock is selling about $338. They're really, really diluting their current shareholders to raise more capital to buy more Bitcoin. I mean, they're really diluting them. I mean, significantly. And an important part of that, not only do they have to come down in price, but they're having to pay a 12% yield. And when MicroStrategy first started this strategy, they used to sell their common stock. They used to sell bonds that paid a yield on them. It was a low yield, like 4.6%. But then as they start raising more and more capital, what they started doing was raise more and more capital by selling preferred shares or bonds. They were taking some of that money and they were having to pay off their brokers for helping them raise the money, which in that current quarter, they actually lost a lot of money because they had to, I believe it was 1.1 billion. And that's because they had to pay off the brokers that's helping them raise capital. So, and with them only earning, with the $86 million, that's really, really important. So this dividend yield on these $85 a share is 12%. So in doing some simple math, it's $711. That means they're going to have to pay out a little over, probably about $75 million a year in dividends to these people, that the companies that bought these shares, or maybe some individuals that bought these shares at this price. So the two important parts of that, if they keep having to raise capital this way, they're not going to be able, their software business is not going to be able to make enough money to pay off the dividend on these preferred shares that they're selling. They can only do this so much. It's 71 million, they make 86 million. So let's say they probably can do this 4 more times, and their profits that they make from their software business, they wouldn't be able to cover the dividends. And if investors don't get in more interested in MicroStrategy's strategy, they're not going to be able to raise any more money. Or what they're going to do, what they've been doing, they're going to take the new shares that they're selling to pay off the dividend yields, what they did the last time. They sold all their dividends the last time to pay this off. So they can't do this much longer, and they need the confidence. And if Bitcoin falls below $66,000 a share, which is their average price paid, because they bought real low for a while, and when they was raising all this capital back in November, they were paying $96 $96,000 for each Bitcoin they were buying. So their price moved up to about $66,000. And if it falls below $66,000, MicroStrategy shares might be below probably $100 a share. I wouldn't be surprised, because what's carrying them is the Bitcoin, and the Bitcoin doesn't kick off any dividend yield. So they can't bring in any money. The only way that they can, if they're not able to raise money, if they're in need of money, only thing they can do is sell Bitcoin. And no company is going to invest in them to buy Bitcoin if they're having to sell Bitcoin to pay off their debts that they have. So I believe this is the beginning of the end for MicroStrategy. We'll see what happens. I mean, I don't know, but we'll see what happens. So here we'll move on to the strangle strategy, where we basically sell options on the SPY and the QQQ ETFs. And we do right now, we're up to about 35 options on each side, because the strangle is selling calls and selling puts. In this example here that we're going to use, it's late in the day. We normally wouldn't sell options this late. It's 246. QQQ is selling for 492 right now. Let's see if we can get a little higher price. So right now it's late. Like I said, it's late in the day. We normally do this around 10:30. So it's, you're not going to make as much money, and you have to actually come a little too close. And with QQQ selling at 492.46, if it rises above 94 with these options here, you can get called in. So this is risky, and you should watch this anyway all the time. And it's at 489. I believe for the puts for the day, we got 482, and I believe we have 498 on the call side. Since the market has been pretty flat, they're not giving you much money on options because there's not very much volatility. But in this example, late in the day, you only got about an hour and 13 minutes left of trading. And if we was to do this, we would actually make $385. But like I said, when it's earlier in the day, and these are daily options, they give you a lot more bid. We like to, if we can get 7 cent, 8 cent, we'll take 6 cents sometime. But the most important part is to make sure you get further enough away that the stock price doesn't come to your option on the call and put, and then you get to keep the whole premium. So that's what we do every day. And and this right here, like I said, it's at the end of the day, and we try to make between $750 and $1,000. Sometimes we can go over 1,000. Sometimes we go less than 1,000, depending on what the options are trading. But we make $385 on the QQQ, and we would probably do the same thing with the SPY. So that's what we wanted to talk about today over MicroStrategy, now called Strategy, and also throwing a little bonus content on the stringer. We try to do that at the end of each video to help you make money out there. If this video was helpful, please like, please share, please comment. Good luck investing, and we out.